Alrighty, this is Chris from MarketSwingTrader.com. This video is about the custom indicators that I wrote for Thinkorswim. Now, in this video, there is no endorsement to purchase any stock or option. Just make sure you consult a licensed financial advisor before you invest any real money. And also pay per trade. Especially pay per trade with these indicators if you plan on using them. If you don't have the Thinkorswim platform, you will need to download the demo, and I believe you can import them in on the demo platform. I'm not too sure though, but I'm going to show you how once you download these indicators, I'm going to show you how you can import them into Thinkorswim. Now once you go to the site, you want to go to the custom indicators menu at the very top, and then at the bottom of the page you will see training video and you'll see download indicators. Once you download it, it will be a zip file. Once you unzip it to your desktop or any folder, then we need to import them. So how do we import them? This is how I do it. When you go to this little eyedropper here and you click on it, edit studies and strategies. You want to come over here, and this right here is where you can type in study names, and there's all types of indicators down here. But let's go down to the very bottom, and we want to go to import. Once we go to import, we want to go to desktop, and then we want to go to MST indicators, and then what I'm going to do is I'm going to import this one. Okay, and then I need to import the other one, which I'm going to import that one. Okay, so now if you go up top into that box right there and you just type in PPM, okay, this is the study. So we want to double click and then we want to click apply. Now right down here you have your up and you're down. Okay, so the indicator changes color. Okay, so you can change this color whatever color you want. So we're just going to go ahead and click OK. Now this is the first indicator, the pivot point moving average. This one I developed. It's basically the same methodology as the other one, but as you can see, it will change color. So right here, when we have a down sentiment, is going to start turning yellow. Then right there it turned a little teal, and then as you can see it's yellow, so we're in a downtrend. And then as you can see it changes color, we're in an uptrend. It changed color, we're in an uptrend. It's teal, so we're in an uptrend. So how do I use this one? Mainly I like using two indicators together, and I just want to let you know this is not the holy grail of indicators. So I like it to see when the stochastics is oversold, okay, and then we close above this pivot point moving average, and then I can start scaling in, and then my stop would probably be like right down in here. Now this one I don't use that often. The other one I use a lot more, but you can use this one if you prefer just seeing one line. Now the other one that I use, let's go ahead and double click and get rid of that one. We're going to type in pivot point, and then we have pivot point moving averages. This one, when you click apply, you will see this one here has 3 lines. Now that red line is the pivot point of the previous candle. So I normally just do not show that. So the pivot point moving average, just go to show plot, show bubble, show title. I just uncheck those and click apply, and as you can see it went away. That red line, it's just the pivot point for the previous candle. That's all that is. So this one, I'm going to click OK. Now, with this indicator, pivot point moving average, this is the one that I mainly use, and this is how I like to use it. When we are trading, when these lines cross over and we closed below the yellow pivot point moving average, you can start looking and say, okay, I think we're in a downtrend. Now, if you were trading below this yellow pivot point moving average, there's no reason why you should be long. So as you can see, we had a nice sell-off. Now, once we closed above both pivot point moving averages, as you can see, the stochastics is starting to turn back up. Once we closed above it, then you can go ahead and look to get in. So you could have gotten in and ride it up. This is how I use it. This is the one that I mainly use, and also I like using it with different indicators, stochastics, and also I'm looking at a daily chart with monthly pivots. So if we look right here, and then this candle right here, we closed below both pivot point moving averages and we closed below the monthly pivot, you could go ahead and get short. And as you can see, we had a nice sell-off. Now, we came down to the support pivot. Now, these pivots are Person's pivots. I like using Person's pivots with filter. So it only shows the support pivot, the pivot, and the resistance pivot. Now, as you can see here, we closed above both pivot point moving averages, but if you look closely, you will notice that the pivot point moving average for right here is still sloping downward. The next day, and as you can see, the stochastics is oversold. It's starting to cross back up, turning back up. As you can see, we had like a little slope of the pivot point moving average. So next day, what I would mainly wait for is a snap back to this pivot point moving average, and then go ahead and start getting in. And then as you can see, we had a nice run upward. And that is mainly how I like to use this. And you can use it on different time frames. Let's look at charts. Let's look at a 10-minute chart. Okay, so a 10-minute chart, let's go ahead and add it. So we're going to do pivot point movement averages. We're going to go ahead and add it. We're going to take away that pivot. This right here is a 10-minute chart on the ES. So on the ES right here, as you can see, we closed below it on 1010, and as you can see, we had a sell-off. What I would do is, since we closed below it, start scaling in right here and put your stop above here. So if you got in right around here at 1232.5 and you got a stop right up here at 1236, so that is how I would use it. And also we closed above it right here. We closed above it pretty high, so you can start scaling in, wait for a pullback to the pivot point moving average, start scaling in, set your stop right here. So the stop would be right there, one tick below. And that's how I like using this. So, and it's not the holy grail, it's just something that I use to keep me in the right direction of the market. As you can see here, we had a nice little sell-off. We closed above it. You could have gotten in around in here, 1243, and have a stop right here around 1235. That right there is a pretty large stop. So might not do that, might put it, if we close below the pivot points, then you might want to place a stop or even just walk away from the trade. This really does not work in choppy markets when you're going back and forth and chop and you're just going sideways. You'll get a lot of triggers, go long, go short, go long, go short. I like using it on pullbacks. As you can see, we had a run up, and then stochastics is starting to turn back down, and you could have gotten short down in here. Okay, so we closed above it, both pivot point moving averages, place a stop round in here, and as you can see, we go back up. Now this just keeps me in the right direction. Also, I really liked using it. See right here, this would have been a good trade. However, we closed below it. You could have gotten in here, but the thing is, and this would have turned out to have been a really good trade. The thing is that you've got to pivot. So, you know, that's like, okay, would I go short? Maybe not. But once you come back down to the pivot, we close above both pivot point moving averages. Stochastics is running back up. You jump in and you put your stop down around here. Okay, so, and then as you can see, we had a nice little run up. And once you start running up, and let's say you got 2 contracts on, and you run up and you close right here, take off a contract, move to break even, and then once you close below the yellow, you want to just go ahead and exit the trade. That is how I like using this. And you can also, it works on tick charts. Let's look at a tick chart real quick. Let's see. Go to apply. Okay, this works on a 3200 tick chart as well. Okay, so you know we were oversold. We closed above it. As you can see, we started running back up. Let me get rid of. Yeah, see, 3200 tick chart. We closed above it. Stop down here. Stochastics running back up. You jump in. And ran up, closed below it. Stochastics turning back around. You go in short on ES. Then you can close above it. As you can see, it started trading all the way up. No, well, right here it traded up, and then we started coming back down. So you start selling half and move to a break even. Then we had a nice little run. But like right in here, if you look right in there, this gives you a lot of false triggers. I mean, so you're going to get chopped up on choppy markets. But as you can see, the stochastics right here. Okay, this is a good one because we had a nice little sell-off. I like looking for a nice little sell-off right in here. Nice little sell-off. Just don't worry about the chop. Just once we have a nice little sell-off, that's what I'm looking for. Stochastics oversold. We closed above it. I jump in. I place my stop down here, and you start moving back up. Okay, this works on ES on a 3200 tick chart. It works on any instrument, basically. As you can see right here, we closed below it. Stochastics is starting to run back down. We could not start trading above the intraday pivot. We closed below it, and as you can see, we started selling off. Once you start selling off, you scale out, start taking profits, and then once we close above it right here, just get completely out of the trade. So that's the pivot point moving average system. That is how I use it. Just let me know what you think about it, and thank you.